Well, good evening and welcome everyone that's in attendance at our session tonight. I just want to wish all of you a happy new year. And for those that are here, and obviously we're recording this, and for those that will be listening to this via video link, welcome to our special event, our Elite Client Trading Session. And my name is Randy McMullen. I am the market analyst with Ideal Trading Lifestyle. And just again want to welcome each of you here to our session, and this being our very first session of the year, it's probably the best thing that we can do is just to talk about going back to basics. And so, but before I get started, what I'd really like to do first is just take an opportunity to let everybody know that and confirm back to me that in fact you can hear okay. That you can see it all right, the session. And so if you could do that, that would be great. Just wait for all your hands up. If you can give me a hands up, that would be excellent. Okay, perfect. Just waiting for a couple more. Excellent. All right. Perfect. So we've got everybody across the board can hear okay, can see okay with respect to this session, and we've got some good internet access happening, and so it's all good. So again, welcome to this special Elite Client Trading event. And today's theme is going to be going back to basics. So we're going to be really looking at just for the first part of the year now, we're getting back to, a lot of you may have taken some time off through the Christmas season, so it's just really great to have some a refresher session. And so the purpose of this session is really to provide you with enhanced trading skills, and as being our preferred clients, that means those clients that are really looking at wanting to develop your trading knowledge, move it forward, and take advantage of applying advanced skills in trading. We welcome you to this event, and that's what we're going to be doing over this and several other events as we broaden your scope of understanding when it comes to trading. Okay, so what we're going to be doing today is we're going to be reviewing market evaluation. So it's a technical analysis looking at current market conditions, so you've got a good understanding where we are right now with respect to the markets. We're going to take that particular market evaluation or market sentiment approach, and what we're going to do next is we're going to apply that into current conditions and into the watch list, so you understand how to take the market sentiment, move it into understanding how we're going to analyze the stock, and then position your buy in the various market conditions, and then we're going to open this up for some client questions. Okay, so, and if you have any issues along the way with hearing or viewing this, just please let us know. But I will let you know up front that it's very difficult for me to keep an eye on the questions when I'm also trying to direct the conversation here and make sure that everybody's following along. Okay, so when we look at the various steps that we're going to review this evening, what we want to do is we really want to understand, number one, market evaluation. Now, we've talked about this quite a bit in the past, and the reason why we're having another conversation around this is probably one of the most vital areas, and also one of the reasons why we've seen so much success with the Ideal Trading Lifestyle side of it in our picks, is because one of the first things that we do as a group every day when we review all the watch list picks is first get our bearings as to where the market is, and that gives us a really good understanding how we're going to proceed forward with our picks, and so it's very important. And in doing that, you're going to be reviewing, for example, the S&P or perhaps SSO, which is the ETF for the S&P, and you might be asking, well, why would I be looking at SSO? SSO gives us volume, and so we can really look at any changes in volume that we don't necessarily always see with the S&P, and so as a result of that, it gives us a complete mirror image of what the S&P is doing with a couple of added other things as well along the way. So it just gives us a really good understanding. And so what we're going to be reviewing here is on a technical side is looking at the weekly, the daily, and the hourly charts and getting a good understanding as to how we're doing our trend lines, confirming trend breakouts, resistance, because this is really the basis of our understanding whether we're advanced in our trading, whether we're just getting started, or whether we're buying and selling option contracts. The most important thing is, do we understand where the market is right now and what the market's telling us? And if we do, then we're in a position where we can move forward with any kind of buying instrument that we want to. So the next step is we're going to have a peek at the watch list, the Ideal Trading Lifestyles stock selection that we've got for the various memberships. And again, we'll be utilizing the weekly, the daily, and the hourly charts. So if there's some clients here that maybe haven't been through perhaps the advanced trading session, this will be a lot of new information for you. And for those that have been as well, a lot of refresher, streamlined. So what we're doing is we're really streamlining our approach so that we're really looking at the most important areas. And we're going to break down these various charts for you because each chart is really a symbol of one key characteristic that we're looking at for the markets. And so here we're looking again at our trend line analysis, so we're confirming our breakouts. We're also interested in our moving averages, whether we're seeing support or resistance and a confirmation thereof. And the indicators, are the indicators telling us that there's a confirmation of momentum? Are we into any kind of an overbought, oversold situation? So we'll be reviewing that as well. Our third step is the precision buy side of it. This is where we establish our stock price, which is our buy, sell, and our stop loss strategy. And here we'll be using, for example, our buy price, which we derive from our hourly chart, our sell price using the daily chart, and our stop loss strategy, again, using the daily chart. Now, you might be looking at this and going, well, you know, I'm perfectly happy just to use the buy and the sell and the stop loss strategy I get from the Precision Buy calculator, and that's fine. You can do that, but please understand you're limiting your gains to, you know, the 1.2 or the 1.5% gains that you're typically seeing on the Ideal Trading Lifestyle side, because that's a very conservative approach to trading. And so what we do is we've developed really the Precision Buy calculator for the masses and for the novice, and also we utilized a lot of data in order to come up with the various buy strategies that we have in the Precision Buy calculator. And so it doesn't necessarily look at each given stock situation. It's more focused on market sentiment. And as a result of that, if you're more educated and more aware of where the markets are, and you're in tune with what your stock's doing, you can be looking at those 1 or 1.5% and looking now at 2 or 3%, or if you're buying and selling option contracts, looking at your 10 or your 20% gains. Okay, so it's very important that you're able to leverage that as well. The fourth step, and just as critical, is the position sizing approach. Now, we've alluded to this quite a bit through our boot camps and some of the other sessions that I've done personally with clients. This is where I found most clients were quite weak, just making sure that you're managing the overall risk and exposure of your portfolio in the markets. And again, it's quite dependent upon market sentiment. And so what's very important here is that we're utilizing a position sizing approach in order to manage our portfolio. Now, there's a different approach if you're buying and selling option contracts, which we have covered off in our options training. But for those that are here that are buying and selling options, generally looking at investing no more than 25% of your portfolio as a total portfolio in option contracts. So what that means is, let's say you've got $20,000 that you're investing maybe in a TFSA, and that's your cash account that you're investing. Well, you should never have more than $5,000 dedicated to option contracts. And the reason is because, yes, you can have great gains with option contracts, but on the same note, there's a lot more risk involved. So as you get better at trading options and as you feel more comfortable moving forward, then you're in a position where you can begin to have more of your portfolio. And if you are, quite honestly, successful in your options, then what you're also realizing is those portfolio gains, and perhaps you're seeing, your 20,000 portfolio moving up to 25,000 or perhaps 30,000, and then again that 25% then takes on a whole different meaning, right? So those are the 4 different key steps that we'll be reviewing. The 5th step is obviously entering your online order. And this will be something that we're going to review through a different session, because it's what we want to do here is we want to take advantage of the various online brokers that you do utilize. Now, in conversations with most clients, there's a lot that are using Questrade. For those of you that have switched over to the Questrade IQ, if you're experiencing any challenges with Questrade IQ, and I'm just speaking because I did, whether it be in a Mac or a PC environment, I've started using the Questrade Essentials, which is not as robust as IQ, but it is a lot more stable of an operating platform to use than the Questrade IQ. So I would recommend, if you have any challenges using Questrade IQ, that you switch to Questrade Essentials. It's just another point and click in order to move over, and takes advantage of the same access and passcode information in which you use for the Questrade. Okay, so I just thought I'd mention that. So we'll have a separate session which will focus on the complete use of these online brokers, whether it be Questrade or perhaps Interactive Broker. I would also like to draw your attention to the Ideal Trading Lifestyle resources page, in which we are promoting various Investors Ed podcasts. And these we have completed now, which actually walks you through in 3 to 5 minutes how to complete a Questrade and an interactive bracket order. So if you haven't had the opportunity to look at those, I would highly recommend that you do. If you've got any other suggestions that you would like to see put as far as a quick learning podcast, and that's really what a podcast is. It's about a 3 to 5 minute learning process. Just send us those suggestions. We'd be more than happy to create podcasts around them, and so you can go in and have your quick look over 3 to 5 minutes. What's important, though, is when you enter your online order, is that when you're entering the order, you're entering it as a day order, so that if it doesn't fill, it cancels at the end of the market day. Once it has filled, you're creating that sell order as a GTC, which is a good till canceled order, so that it stays on the books until it hits your price, or until you adjust it and it hits your other price, right? The 6th step is the ability to track your position until it's sold, and that's quite important. As you see changes in the market, you want to make sure that you are reviewing market sentiment. And typically what's important here is that remembering that you are going to take some losses in the market. It's important to understand that. And when I talk to clients, it's not the fact that they're taking a stop loss. The real issue is the fact that a lot of clients decide not to sell at their stop loss and hang on to it, anticipating it to turn around and perhaps move up. And in some cases, the stocks do turn around and do move up, right? And if you're more skilled in the area of understanding trends and understanding channel supports and resistance, then you can perhaps see where stocks are finding support and trending up. Okay, so we actually recently had an Ideal Trading Lifestyle stock that did stop out, but the very next day began to move back up again, and within 3 days had surpassed and actually hit its sell order. And if you looked at the chart on this particular stock, you would have, if you would have had the kind of skill sets that we're going to make sure that you've got this evening, you'd have been able to see that it found some pretty strong support and began to move up. So you would not have inadvertently sold that stock at its stop loss strategy based on the precision buy calculator. And so essentially, if a stock does stop out, recommended that you do sell that stock, or again, if you're educated on channels and trends, you use that information. And honestly, if you're looking at a position and that stock is dropped and you're not sure, you're not confident, send us an email. Just say, hey, I bought this stock and it's been down for a couple of days now, and I'm just wondering if I should sell it. But also, rather than just ask us the question, give us your idea on it. So as part of our elite group here, we want to start to work with you as a group, and also see that you're growing and building in your knowledge stream. So, rather than just ask us the question, say, for example, I see that, I've drawn a trend line and it looks like the stock is actually at the supporting trend line. Would you recommend I sell this stock? Now, obviously, we're not going to make recommendations. We will tell you essentially what we see in the charts, but you have to make your own decision. But if you've identified a trend line or a channel support, okay, you start to feel more confident about that. And even if a stock does drop a little bit, you feel much better about the fact that, well, it's probably going to find support. The market sentiment isn't in a declining bearish, or everything's falling through lines now, right? So you start to feel more comfortable with the markets, and that's really what it's all about. All right, so those are the 6 steps that are quite important to understanding how you're going to analyze, buy, track, and sell positions. So the first thing that we want to do is we're going to go through and we're going to start to discuss the technical side of it from a market's perspective. So what I've done here is I've created a page here with the SSO, which, for example, is the ProShares for S&P 500, and it completely mimics the S&P, but I like this better than the S&P because it gives me the volume. It seems much cleaner to go through. And so we're going to show you essentially what we do each day when we analyze the picks. And so the goal here is that we can kind of rub this information off, and you can start to look at some of it yourself. So if you're looking at the MWA watch list, or perhaps tracking other positions yourself, you've got a good indication then. So what we're looking at here is the weekly chart. Now, the weekly chart isn't necessarily the chart that we want to be determining our overall precision buying and precision buy strategies, but the weekly chart is a critical chart in that it'll give us pretty strong indications of market support and weakness. And specifically, what we're looking at here, you can see on SSO, is that we saw right at the beginning of the year of 2013 that, you remember, we had the fiscal deal plan was made at the 11th hour and everything went through. And for those that had been tracking the markets, December the 31st was actually quite a positive day in the markets, even though the volume was very low, because there was so much optimism over the fiscal plan going through. And we saw on January the 2nd, we saw that the stocks, the markets really gapped up and popped up, and actually have not even dropped down to fill that gap in yet. So what we haven't seen yet actually is a fill-in of this particular gap from the 31st of December, you can see right here, to January 2nd, which was the next market day. But what we did see was a definite breakthrough of a very strong resistance level that had been in place now since September. You can see here, looking back, these are our weekly candles, so you can see that we were unable to break through this resistance since September, since we hit a new 52-week high. We tried a couple of times in October, we tried in December, and we didn't break through until the fiscal plan actually went into fruition, and they were able to negotiate it. but it was critical for us that when we saw this, that in fact we saw on the weekly charts a breakthrough of this pretty significant trend line. So that gave us a very optimistic view of the markets. Okay, and so, but what's important is that since that particular point, we have seen relative flatness in the market. So even though we saw this nice big gap up and pull through, we've seen a lot of consolidation occurring. So that's what we're experiencing right now. If you look at the gains from the 31st to January the 2nd, they were huge. We're talking about almost 6% gain in the S&P index, which is enormous for 2 days. But that's what happened during those 2 days. And what's interesting is those are holidays. So, I mean, traditionally volumes are low. There's not a lot of players in the market, but there sure was enough happening in order to move those markets ahead. But we saw a definite breakthrough of resistance. And what's also important is we've seen a confirmation of support with that resistance in that we didn't actually drop down after a couple days and fill that gap in. So that's very important, what we're seeing here. But this consolidation is waning right now, meaning that essentially we could be in for some weakness in the market. So the weekly chart, the fact that we actually haven't broke through and continued to follow this trend up, tells us that we could have some weakness and at least a pullback to support. So that's kind of what we're anticipating. Now, with what's going on in the market, it's also important to understand that we're entering probably the most significant portion of the year when it comes to earnings. The first Q1 is the most important earnings session of the year. And if you didn't know that, please jot that down, write that down. And the reason why it's so important is because it comes after the biggest quarter of the year, which obviously is the Christmas quarter. Retail numbers, manufacturing numbers. I mean, the amount of cash that is transactioned through the last quarter of the year is almost equal to all 3 quarters added together. So that's why the first quarter of 2013 will be extremely significant. Now, we saw that the markets today, and we'll just have a look at that now. When we look at SSO for the day, we can see that we actually closed below a trend line here. You can see here. So we've got an upward trend line that was happening, which goes right back to the middle of November. And so this upward trend line here, and all I did was connect the cycle lows. We had a break below here, right? But we still continue this trend line up. You notice that what's interesting is we dropped below this trend line in the middle of December, continued to drop down, but on January 2nd, it's like the markets never took a beat or dropped down at all during that period of time and just continued on as if they normally would have moved up. And so, but what we saw today for the very first time, and unless you're good at trend lines and channels, you won't see this, but for the very first time, we actually closed below a significant trend line that had been in place since the middle of November. Now, we did drop in December, but look what happened when we did close below it. We had a big drop. I mean, it was a very significant drop that we saw the middle of December to almost the end of December. And so right now we've closed below that line again, indicating that we could be in for a little bit of a pullback. But don't be misled in thinking that everything's going to be wonderful. If the markets open up a little bit higher tomorrow, Alcoa released their earnings today, and they met analyst expectations, and they were, last I checked, they were bidding 1.5% higher in the off trading hours. So we're seeing it bidding up, so that we could see a little bit of a buildup in the market tomorrow morning. But again, with earnings season just upon us now, if we see any other companies release substandard earnings, well, Alcoa will kind of be a faint memory, right? So the important thing that when we are looking at stock analysis is we don't want to be so focused on the news element. The most important thing is to let the analytics of the technical side of it make our decisions for us. So when I'm looking at this right now from a charting perspective, I'm seeing that for the first time now in the last several days, we've dropped below this line here. So we failed to find support here and drop below it. So we could drop and hit, the 62 range on SSO and perhaps find support. But now what was support is going to be some resistance, so anticipate this line to be resistance. So what we're seeing now, the weekly chart is showing us that we've got some consolidation going on in the markets. The daily chart confirms that, and a little bit of weakness today as we drop below a trend line, telling us that we need to be cautious with the markets. Now, looking at the hourly chart for SSO, so when we look at the weekly, the daily, the hourly, each chart gives us a little different snapshot, and what we're looking for along the way when we look at these three charts is some confirmation. So the weekly chart gives us that 60 or 50,000 foot view of what we see in the market. So it's kind of like when you stick your thumb out and you kind of look at something long range, and as a result of that, you can get a pretty good flavor with the scope of what's going on. When you look at the daily chart, it's getting up a little bit closer. The hourly chart is like having a magnifying glass in front of you. But the important thing here is we'll never make the decision on the hourly chart to say, yeah, everything looks great, I'm going ahead. It's ultimately all three charts combined, right? So never does one situation or one chart make a buying decision, right, in any case. So you need to always pull all three together. And what we're seeing with the first two charts is a consensus that there's some market weakness. Could be short-term weakness, right? Probably will be short-term weakness because we're still very much into a bullish market. We're not bearish in any way yet. We're still overcrossed. I mean, if you look at our daily chart, we're still overcrossed, which tells us that we've still got some good buying momentum going on. So even though the volume is very low right now, so it's nothing that we need to be overly concerned about, other than the fact that we did close below a trend line tells us that we could be in for a little bit of a pullback on the S&P index. The hourly chart is kind of giving us some of those same types of indications. So you can see that from January 2nd to 3rd that we had this nice rise and we've been kind of consolidating. Then yesterday we began to decline. And you notice that we have failed to break through our resistance levels, which were obviously support before and are now resistance levels. And you can see that as of yesterday, that on the hourly chart, we actually undercrossed in our momentum. So it's kind of telling us that, yeah, you know what you're seeing over the long term is also being identified in the short term, which is some overall weakness. Okay, so just in summary, when we're looking at the markets, we're seeing right now, today, that the markets are confirming some short-term resistance and the potential of a pullback to support. So with this in mind, we anticipate that stocks will struggle to break through some of the resistance levels. And unless that you've got stocks that are overcrossed and in a rising momentum, doesn't necessarily need to be rising bullish, but overcrossed and rising. If it's rising bearish, it's still a good stock, but understand that you will definitely see some resistance levels at overhead EMAs or perhaps trend and channel resistance lines. Okay, so that's important to remember. Right, so we're in a little different situation right now than we were probably several days ago when everything was moving up and we were rising bullish and it was wonderful and great. Well, we've seen a little bit of a pullback and perhaps the markets are now looking to fill in that gap that was created through the New Year's. So what's important here now is being able to take what we've just discussed and now relay this into a stock environment, right? So remembering that we do this every day when we're analyzing our picks for Ideal Trading Lifestyle in order to post those picks there. So this is what we saw today with some weakness in the market, short-term resistance, and so any picks that we're looking at right now will definitely be of a cautionary view. That means anticipating a little bit of a pullback, and at the same time, looking at selling at key resistance levels. Okay, so with that in mind, let's have a look at our watch lists. So in looking at our watch list, we did have a couple of picks today. We had RGLD, which is a gold stock, and what's important to understand about that is being a gold stock means that it doesn't necessarily apply to what's going on in the S&P. It would now be focused on the sector with respect to gold, right? So we can look at this as an individual stock now outside of the S&P because it'll perform based on how the gold sector is doing. ALXN was also a pick earlier in the day. And I thought this would be good to discuss because we're going to show you how we would take this stock and kind of parlay it into what we just showed you with respect to what's going on with what we identified as the overall market sentiment. Okay, so in doing that, let's look at the second one, which was ALXN or Alexion Pharmaceuticals. All right, this stock here is it's a fairly expensive stock. As you can see, it's a $97 stock, and we're first looking at the weekly chart. Now, remember the weekly chart, it gives us that thumbnail view, that kind of 50,000-foot view overall what we're seeing, you know, in that particular stock. And so what we're seeing here is we're seeing you've got the dotted blue lines, which are trend lines that I've put in place. You're seeing here that we are continually finding weakness now, and our highs, our weekly highs, are actually declining. So that's a first indication that there's weakness in this stock. And that also confirms with what we're seeing with the S&P. Okay, so this is kind of giving us a heads up that there's some changes going on. You notice we had this nice gap up happen near the end of December and into January. But since then, we've been kind of waning, right? So we've been pulling back. But what's also important is we have a lower trend line that's trending up. So we have what's called a convergence happening here. So we've got two trend lines that are now connecting. And you can see that we're getting very close to actually doing a full connection of these two lines. And what that means is that we are going to see a break. We're going to see a break to either the upside or the downside. Now, as far as which way are we going to go, well, I would lean towards a break to the downside, and the reason for that is because that we've got the weekly highs are already trending lower, right? So we've got that happening. So we're kind of into a position where we've got, you know, for example, our weekly highs here that are continuing to decline, and as a result creating this upper trend line that's also declining. So it's kind of giving and showing that there is some weakness in this particular stock on the weekly chart. Okay. Let's have a look at this stock now on the daily chart. Okay, so the daily chart is kind of giving us a similar view, but you can see the breakout that happened here. But what's important here is that we had a trend line that was in place and had been in place since the end of November, and a breakthrough of that trend line. But since then, we have now pulled back, and we've actually closed below this supporting line here for the first time. We did 2 days ago, and then today we had a little bit of an update today, enough to show up as a pick, but you can see very clearly that we're seeing this decline happening here, which is confirming what we just saw on the weekly chart. Okay, so we have now both charts, the weekly and the daily chart, confirming a decline on the highs, and you can see the convergence happening here as the lows are trending up as well. Okay. And traditionally what's going to happen here too is stocks don't like to keep gaps in place, so you may see the stock drop down and fill in this gap. Now, so let's have a look at this stock now on the hourly chart. So just that we've got a better indication what's going on here on the hourly chart. Well, what we're seeing on the hourly chart, quite similar to what we just saw with the S&P. We were near the early part of the year, you can see that we were crossed over and moving up quite nicely. But since November the 4th here, we actually have undercrossed and have been unable to break above that as well. Now, our hourly chart, however, has actually popped above a resistance line. You can see this here. We did pop above a resistance line, and this is what's really important here, is I'll be talking to clients and they'll look at something like this and they'll get very excited and they'll say, well, gee, we just broke above a resistance line here. And so this is a very positive sign. It's a positive sign from a very short-term aspect, meaning that you can take this positive sign, but you need to then parlay it into the daily chart and the weekly chart and say, okay, so even if I am seeing a crossover right now, does that mean that I'm not going to have this resistance, or is this resistance far enough away now so I could profit from it? And the answer in this case would be no, right? I think we can all pick up on that one. And so essentially what we're seeing here now with this stock is we're seeing a confirmation of weakness, not just from the market standpoint, but also from the stock standpoint. So it's moving very similar to what we have seen in the markets. So as a result of this, we would definitely look at this pick and say, you know what, based on what we're seeing from a market sentiment standpoint and what we're seeing from a stock standpoint, it's probably not the best candidate right now, even though the hourly chart looks fine, other than the fact that we haven't got a crossover of the momentum. Okay? The next pick. Now, before I continue with this pick, I thought I would do is just kind of just see if there were any questions at all with respect to any of the information that we have just identified. Okay, I'm just looking for either a hands up if somebody's got any questions from what we've identified. All right, then what I'd like to ask each of you in the room is this, is that does this make sense, what I've just shared with you from a market sentiment standpoint? Does this make sense, what I've shared with you, how we take the market sentiment, how we use that to understand what we're going to do in the markets, and then we relate that to the stock? Does that make sense? Just give me a hands up if you've been able to pick up on this. Good. Okay, perfect. All right, just wanting to make sure that we've got everybody's hands here. Okay, good. All right, so then let's continue on now, because this is going to be a little bit different. So what we've just looked at with the S&P, which is SSO, has been kind of where we are in the markets right now. And I think what's really important about this is that from this, you're going to understand why it's significant to be patient in the markets. We've just come off a great month. December was an excellent month. For those that are Ideal Trading Lifestyle clients, we were almost 100% accurate in our picks. It was a great month for trading. Clients walked away, you know, with several excellent picks and hopefully had a great Christmas as a result of that. Well, guess what? There's times when you can harvest, and there's times when you just want to be kind of on the sidelines waiting. Right now we've got some consolidation going on. By doing the right technical analysis that we're showing you here tonight is going to help you to be patient in the markets. So rather than sitting there and saying, gee, there's no picks today, what's going on with this, you yourself will be able to understand now when you look at the markets and say, well, I can understand what's happening here. We've got some resistance. We've got some weakness in the market. I do the quick thumbnail with the weekly chart. Well, that's telling me that we got some challenges because our weekly highs are dropping. Daily chart actually is confirming that, but is actually closed below a significant trend line now, which tells me that there's some weakness there. And the hourly chart is even showing that up close, that we've got the same concerns. So it's quite important. Now we have a different stock. So RGLD showed up on our watch list. We analyzed this stock, and just so you know, posted it as our pick for tomorrow with Ideal Trading Lifestyle, because we liked what it was telling us. So let's just have a quick peek as to what we're seeing here. All right, first thing we're looking at is the weekly chart for RGLD. Now remember, this is a gold stock, so we're looking at this now with respect to where it sits as a gold stock outside of the S&P index. So what we're seeing here is we're seeing the weekly trends here are relatively have been trending down, but you can see that beginning in January, we began to trend up, and our lows are trending up, which is also very important. Now on the weekly chart, we're not as concerned about the momentum. What we are wanting to see is either a flat or a rising momentum that's coming out of a decline. Because remember, this momentum is a weekly momentum. If we wait for it to be rising, it takes quite a while for that to happen. You could be missing lots of opportunities. What we definitely do not want to see is a declining weekly momentum. Never do we want to see a declining weekly momentum. That tells us that we need to stay on the sideline with this particular stock or this sector until we see it at least beginning to flatten out from a decline, which is what we're seeing right now. Okay, so what we're seeing right now here is that we've got confirmed rising of weekly lows and room to 8250, which is this dotted blue line here. So if you actually head the weekly chart up, you could actually just draw a line, and you'd see that that was in and around the 8250 mark, and you see the stock closed at about 8091 today. Okay, so the weekly chart tells us we got a little bit of room. Let's look at the daily chart now. The daily chart is showing that we've got the lows that are trending up now. Today's the first day after a few days of decline, which is nice. We popped up, you can see here a few days ago, hit a resistance line, which was a trend line that's been in place now since about the middle of November. And see, this is what's important with understanding trends and channels, and this is why I spend so much time trying to educate clients on this. Whether you're just buying and selling the odd trade or the odd pick, or you're actually quite involved and doing several picks a week, or you're now looking at options and you're buying and selling options, unless you're good at this, you will not be successful at any other buying instrument, whether it be shares or options, because that it all boils down to one thing. Am I seeing the direction of the markets, and particularly the direction of that stock? And is it making sense? Right? So you can see, just connecting the cycle highs here, we hit a resistance level back the beginning of January, but we dropped, we found some support. So you can see a confirmation now of our room to 8240, which essentially is probably our sell price. If you look at this, it's actually around 8250, 8260, but you have to allow for the line of decline, right? So we always generally go a little bit underneath that. You'd rather be a little bit short than try and get more out of this stock, and then perhaps it just hits that line and begins to drop down again. Okay, so as a result of that, we've got a nice little confirmation here. We're rising up again. You can see we've come out of decline. We had a flattening for a day or so, and we're rising back up again. And so this is telling us that we got a little bit of room. So we're seeing a confirmation now on the daily chart as to what we're seeing on the weekly chart. So it's quite a bit different than what we're seeing with SSO, which is the S&P. But from this chart, we're able to get our sell price, which is 8240, which represents this trend line. We're able to get our support, which is 7850, which is this lower trend line. So here's the thing. If we close below this line, you want to get out of this stock. You don't want to be in the stock. You want to move on, right? Because by closing below this line tells us that it's lost a lot of momentum. And you can see that, when we did close below this trend line that had been in place for quite a while, it's taken 1, 2, 3, 4, 5, 6, 7, 8. It took 9 days for you to realize any kind of gain on this stock. And that was just great that it did come back. But if you would have just, for example, if you'd have bought the stock, let's say back here, saw this happen and said, you know what, I'm going to get out of this stock right around here because I'm closing lower, the loss would have been quite minimal, wouldn't have been a big one, probably about 3.5%. You'd have been out, right? So as a result of that, it's important to understand these channels and trends, and this is where you're going to build your own confidence, is as you become more and more familiar with trends and channels, and you start to see how they work, and you start to see them as doors that open and close, allowing for stocks or markets to pass through or to be restricted. As you begin to see that, you're going to build a lot more confidence in your own trading. But it only comes with practice, right? Now, we try to provide you with as much information as we can through sessions like this. If you don't listen to the daily market spotlight that's being done by Jason, I would highly recommend that you do that, because we actually review the charts each day, and they're posted, and we speak to the overall support and resistance with trends on both the S&P and the TSX. So it just kind of allows us to provide you with that knowledge, but at the same time, you can take that and you can start to build on it. We also do a weekly spotlight session every Monday that looks at the week at a glance. And there we look at the weekly charts. So we talk about support and resistance on both the S&P and the TSX. So I would really encourage you to make sure you're listening. Now, the daily spotlight session that Jason does, the market update, it's about 1.5 minutes. So it's really quick, to 2 minutes tops that we'd go through the news. The weekly spotlight is in and around 5 minutes, because we're also discussing some of the picks that we've had with Ideal Trading Lifestyle, reviewing the trade statements and a few other things. But I would really encourage you to take the time and review that. Like I said, it's 1.5 minutes. We've done it in MP4, so you can watch it on your iPhones, your Android, all your smartphone devices. So it doesn't matter where you are. If you want to take 5 minutes when you're in the bathroom, for example, and say, well, I'm going to watch the market pulse for the day, you can do that. You might get some people that might say something afterwards if they're listening to it, but at any rate, you've taken 1.5 minutes and had even more productivity. All right, so anyways, looking at the daily chart, what we've got here now is we've got a confirmation of momentum going forward. You can see how we've dropped for a couple days, beginning to move up. Confirmation of what we're seeing on the weekly chart. Now let's look at the hourly chart. As we get in with our magnifying glass, what are we seeing here? Well, this is actually some great stuff we've got going on here. We had a nice breakthrough today. So you can see how we had a decline happen in the early part of the year, consolidated for several days. But you can see yesterday, and this is quite important here, these little insignificant, or what look like insignificant candles, as they break through lines of resistance, and sometimes they're the most insignificant candle that you can see. That means that unless you're able to draw a line, you're just not going to pick it up. But you can see yesterday, which was actually at the close of market yesterday, this stock actually popped up and closed above this line. So looking at this stock, if you drew this line, you could see, for example, that we closed above this line, didn't break above the 22, but the fact that we did break above this line gives us a good indication that now you want to make sure you've got support, right? So now we confirm the support. We're moving up quite nicely. You can see the 22 and the 50 EMAs are all trending up. And so what we're seeing here now is the opportunity on this stock to look at getting in about halfway between the 22 and the 5 EMA, and mainly because we are beginning to see the 5 flatten out, so we could see a little bit of a pullback in the morning based on the fact that this stock did rise up over $1.30 today, so it had a nice increase. A little pullback in the morning isn't such a bad thing, right? And we're going to show you near the end of this session when we talk about how to position your buys. Okay, so we're gonna go through that now. These are we had discussed this at our boot camps, but we're now going to be able to apply this in the real world. So you're going to be able to walk away with some good information on how to do that. Okay, so you'd be looking at about a buy-in of $80.50 here if you go with the halfway mark, looking at that. So you can see the difference between the two picks here. So summary of what we're seeing from a stock review, we're seeing that the market right now is confirming short-term resistance and a potential pullback to support. We saw that very explicitly on the daily chart. We anticipate that stocks are going to struggle to break through resistance. So what's important here is that we're not into a rising bullish market because we have had that little bit of a pullback, and closing below a support line tells us that we need to make sure that we're getting out at resistance levels or just below resistance levels on our picks. So ALXN, we can see, was confirming resistance on both the weekly and the daily charts. So that was kind of the stock that we just said, we don't want to have a look at that one. RGLD, which is a gold stock, we see that it is confirming momentum. It's got trading room on both the weekly and the daily charts with rising momentum on the hourly chart. So what we've identified here with this stock was a sell at 82.40. Looking at daily chart support with respect to a stop loss strategy at 78.50 and our buy-in at 80.50. So essentially about a 2.3% profit. So it beats that 1.2% that you're getting with Ideal Trading Lifestyle if you start to apply the disciplines that we're showing you here through this special session. Okay, so what I'd like to do now is just spend a little bit more time just discussing our approaches to market sentiment so that we've got a pretty good flavor for it. But before I go on, I again want to just kind of open it up if anybody's got any questions at all. Want to make sure that each of you have had the opportunity to ask them. Okay, not seeing anybody here. Perfect. Okay. Now, you probably remember this chart. Now, this is a great chart because this chart is one that needs to be reviewed many times. And it's not because it's a busy chart. It's because it is critical to being successful in the markets. And it's the kind of thing that you can never get enough of. Now, some people may say or may disagree with me and might say that, yeah, I can get enough of this chart. But I'm telling you right now, and I've been trading for almost a decade, you won't get it. You can't get enough of this chart because what's important about this chart is the clear signals that happen at different times in the market. Okay, so let's just discuss this so we can see in the rising markets that we've got a clear signal with the EMAs aligned, the 200, the 22, the 50, the 5, all aligned nicely, which means the 5 is above the 22 is above the 50, and the 50 is above the 200. What's also important here is we have a confirmation of crossovers in momentum as well as our rising RSI, telling us that there's more buyers moving into the market. Okay, and the other thing that's quite important here is we're looking toward the RSI, making sure that when we hit those periods of being overbought, you can see right here, which is in and around, in this case, the 80 mark. Okay, you can see that we generally see a little bit of flattening until we pull back in, right? But we find support at trend lines. So we're able to draw these trend lines and find support. So this is what we're seeing as our rising bullish markets and the prime time for us to be really doing well in the markets, okay? Then we get into, for example, again, the importance of trend lines when we have this decline and we actually close below a trend line, and the fact that a lot of people will expect that, well, we've gone down, we're going to just go right back up again. No, because remember that when we close below a trend line, what was support is now resistance, and that's important to understand because you'll see how that plays through in so many different ways, right? Now there are times where that doesn't happen, but more often than not it does. And so we can only look at the law of averages as we begin to apply ourselves on the whole side of technical trading. But you can see that when we drop below, we have a challenge breaking above again. And here you can see this is way back now in March. And so we begin to rise up again following the trend line, but we pull back, right? And what's important there is that as we relate this to our momentum indicator, you can see that in this case, we still haven't been able to cross over, so we're struggling to cross over again. And so as a result, we drop back down, and we're now undercrossed. And you can see that we're still failing to cross over here, and you can see that our RSI has dropped way down below the 50 mark, which tells us that there's weakness in either the stock or the market, right? So we can see that here, and as a result of that, we continue to drop down. Now, what's important here is we find some support, and we begin to trend up again. And so the right time to buy on this, obviously, we're quite skeptical here. We'll still be very cautious. This is into our rising bearish, but as we see the crossover happen, now we start to feel that we've got some legs in this market again. So you can see we've shaded in these areas here. So when you look at a particular stock or a market, it's important to understand where they fit into what we're seeing with this equation. Are we seeing them with their EMAs aligned? Are we seeing either the market or the stock still finding support at long-term trend lines, not short-term? So these got to be trend lines that have gone on for a couple of months now. We don't want a trend line that's only been in place for a week or a week and a half. That's easy to break below and easy to break above, right? Actually easier to break below, harder to break above, you can see. Now, what we're seeing here in every case is we're seeing, a confirmation of trend support, momentum crossovers, RSI moving up, right? And we're seeing positions moving up, but still finding weakness when they're overbought, hitting, for example, in this case, this is a 70, probably the 70 mark on the RSI, and you can trend the RSI. So you could actually, if you wanted to, take a line and draw it here, and you would find that you would be trending this RSI as well. And you find how quickly you can see a difference in the market when you begin to trend the RSI. And when the RSI breaks above its trend, there's another confirmation, right? So yeah, you can get into the habit of doing that. You can do that on a chart for an index or a sector as well. Okay, so I like bringing you back to this particular chart, not because it's busy, but because it tells such a story. And it's one that we can look at here that really has gone on for a year, right? So this is 12 months, and you see the same indicators telling us the same stories every time to confirm momentum here, 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 and here, and also when the markets are moving into decline, crossing under, RSI moving down, closing below a trend line. These are the three things that we see consistently happening both in rising and declining markets. Okay, so I just wanted to make sure that we hit on that one as well. Okay, and understanding the difference between the neutral and the buy periods. So again, we've had this particular chart in place. I think that in reviewing this through our boot camps, there was a lot of people that failed to understand the significance of it. Because you are a group of clients that are wanting to take things forward, that are wanting to take advantage of what we have to offer in terms of knowledge and skill set and expertise in the markets, I think you're going to begin to start to see why we go back to these charts and why they're so important. And so the thing that we've done here is we've kind of zoomed in a little bit, and rather than looking at all the shadings, we've added the channels here, so you can see the importance of channel support and resistance. And I've had so many people say to me that when I'm drawing trends, how do I know if a trend is really a trend? And the thing that makes a trend is that there has been points where either the stock or the index has found support or resistance, meaning that when it's been above it, you've seen it actually hit it and move up again. And when it's been below it, you've seen it hit it and drop back down again. If it hasn't done that, if it keeps moving through that line and crossing under it just like butter, then it's not really a trend line that's worth any significance. So That's the test of a trend line or a channel, is that are you seeing points that are going to, for example, hold the stock up. So here we're looking at the S&P. And so what the S&P is telling us, let's just have a look at this channel line here. You can see this is quite significant. So this is a high. Here we approached it again. We failed to break through it. Now, we're seeing here that we actually had several days in a row that we failed to break through this channel, and we finally did. And when we did, we found support. Yes, we closed below it once here, popped up again here, but you can see we found support at an upper trend line. Okay, so we've got, it's never, when you're looking at trends and channels, it's never one line that's going to be significant. Okay, you're going to find several lines are going to work together. So the fact that we closed below this line, okay, you might say, well, gee, I better get out of the markets, right? But if you had drawn this line, you'd say, well, gee, this is a long-term trend line that goes all the way back to December, and in this case, this was March. So this is 3 months, right? And let's see if we'll find support, and we did, right? So you can see quite important there, right? So what's significant about this is that in the neutral periods, okay, which are the periods of time where things aren't perfectly aligned, right? So the EMAs aren't aligned. We're seeing that there is a confirmation of a trend breakthrough, but we're still very much in a bearish situation. So we're still finding resistance at overhead EMAs. There's just a lot of stuff above us that we're unable to break through, okay, that we're going to see resistance. Those are neutral periods. Those are periods where we want to be getting in, but we want to be getting in with smaller amounts of positions, right? So we want to be very careful as we move forward. And again, we'll show you some strategies at the end of this session that'll help you with your buying and getting in as well, okay? So I'm just doing a time check here, and we're doing well on time. And as we move into the strong buy periods, well, these are the harvest periods, right? So these are the points where you really want to be in and out of the markets, taking advantage of the gains. And this is when you've got EMAs aligned, you've got confirmations of trend line support, you're breaking through channels, right, and finding support at those channels. And so essentially, the other thing is you're seeing rising lows, which are very important, okay? These are the types of things that we forget about. So one of the things I've noticed as I've been trading for, like I said, almost a decade, is it's very easy to get lazy in trading. It's very easy to not follow the disciplines and to start forgetting things and take sidetracks. And I've done it several times. I'll analyze stocks and I'll just go, oh, I'm too tired to, you know, for example, look at the S&P 500 and what's going on in the markets. You know, and then, but I've been caught several times, right? So I'll buy the stock and I'll go, wait a sec, why did I buy the stock? Now it's going the wrong way. Or I'll rush to get into a stock because I just want to get into that stock because I think it's going to go, and it doesn't, right? So if you just get into making sure you're following these disciplines and you're not getting lazy with them. And if you catch yourself getting lazy, it's the kind of thing that if you're a runner, right, you're used to getting on that treadmill or hitting that road and making it move, right? So we got to always be cognizant of keeping our trader's mindset very focused and very diligent. Okay? All right. What we had talked about now, just kind of in conclusion as to what we've described here, one of the other aspects that I tried to be very careful in this session was not to present you with too much information. What I have found through the boot camps is we would go for 2 or 2.5 hours in some cases, and the amount of information that I had, put into the presentations was exhaustive. And clients did come back and say it was a lot to discuss and at times overwhelming, right? So we want to make sure that as we're moving forward with these elite sessions is that we're really looking at nuggets and exploring that nugget. And then the next session we explore another nugget. We don't want to try to cover the whole thing. So today was really back to basics. Today was how do I look at the market, specifically the market right now? And how do I apply the stocks to the market? And how do I apply a stock that's maybe outside of the market, like the gold stock we showed you? You apply it to its sector, right? So And then we talked a little bit about just understanding the market. So today was really about understanding the market. That's been the most important thing. The last part of our session here, I just want to go through this information with you. We've done it several times, but I still get a lot of glossy-eyed looks, and the reason why is because we typically do this at the end of the session when we've got hardly any time left, and so what happens is we just don't seem to cover it. So this is a buying based on a sentiment approach. So you still follow all the same information. You still do. And if you're not following the position sizing calculator, I highly recommend you do. I do on a consistent basis. And what you'll find is that the more and more that you're in and out of the markets, you will get to a point where you don't even need to use the position sizing calculator. You'll just know. Right, so based on your portfolio size, oh yeah, I'm going to take 25% of my portfolio and apply it into the stock. Oh, it's a caution. Oh, I'll cut it in half. Cut it to 12.5%. Right. So, if you're looking at a position and you say, well, I've got 25,000. I'm a cautious view right now. Yeah, I need to look at 12.5%. Right. So I'm going to be taking, in this case, if you've got 25,000, you're going to be taking, for example, about 6,500 and applying it into your particular stock position, right? So what's important there is that you'll get to be able to do that. What I'm going to share with you now is how you can break that up even further based on market sentiment and be into a situation where you're even managing your exposure in an even more profitable way. All right? So we've gone through this before, but I'm going to go through it again, but I'm actually going to apply now what we had with our gold pick. So we're in a rising bearish market when it comes to the gold sector. So you can see here we've got, if you're rising bullish, you're going to apply 50% of your position to a previous day high or close. Now, rather than me go through every single one of these, I'm going to go right to the one that applies to the stock. Rising bearish, saying here we want to buy 50% of our position at the previous day close with the balance at trend support. We're going to sell 100% at target because we are in a bearish market. So let's just go back and let's apply that. So we're going to say we're going to buy 50% of our position at the previous day close and the balance at a trend support. Okay, so if you remember, our pick that we were looking at was RGLD. All right. So what we're saying here is that if we're looking at buying at, in this case, we've got trend support at 78.50, room to 82.40 on our daily chart. We know that our hourly chart is where we're getting our buy-in at 80.50. So what we're suggesting here, because we're rising bearish, we're suggesting that you do the position sizing calculator. The fact that this is a caution, right? So you're going to have, let's say the position sizing calculator says you're going to purchase 250 shares. So you're going to take 250 shares. So what we're suggesting, if you apply what we just shared with you on this particular chart, you're going to buy 50% of your position at the previous day close. So at that $80.90, which is what it closed at, you're going to buy 50% of the 250 shares of the 300 shares, so 150 shares. The next 150, you're going to place two orders. The next order is going to be at your trend support or at your buy price. Okay? So what this does is, because we've typically seen rising bearish markets as markets that are beginning to break to the upside. Okay, and so what this means is that rather than not be in the position and miss out on the opportunity, you're going to get in with half the shares, and then you come in with the other half as a second order. Okay, and so what this means is that you're definitely going to be probably filled the next morning, at least with 50% of your positions. If it drops down, it'll fill the balance. Okay, so it's a great opportunity to make sure you're not missing out on stocks. Now, what's important here is that this is because it's rising bearish. If you were flat bearish, looking at that same stock, we would suggest that you would buy 50% of the position at the hourly trend, which essentially would be your buy price. So let's just go back now. Let's say we were flat bearish with this stock. So I'm going to go back to the hourly chart now. And so what we would do is we would say if this was a flat bearish, so if we looked at our daily chart and we saw that we were flat bearish, what we're suggesting here is that you would buy 50% at the $80.50. Then you would purchase the other 50% at $80, which was the next trend line that was below. I believe these were questions that I was getting from Ari at one point. He was concerned, how do I use these particular buying strategies in coordination with the position sizing? So I remember you asking specifically those questions, and I tried to explain them to you. I'm not sure that I did a good job or not, but this gives us a working example. And so essentially, you can apply this now to any one of these sentiments, right? So essentially, if you were buying this in a declining bearish market, well, you'd be looking at, again, trend support and buying the balance at the next lower level of support. But you're selling at, in this case, 1 to 2% profits, looking at channels and trends. Okay, so you can see there's definite differences in where you're selling and where you're buying stocks as well in the bearish markets as well as the bullish markets. If this stock was rising bullish, we would suggest that first of all, it probably wouldn't be a caution, so you might be looking at, let's say, 400 shares or 500 shares. You would buy 50% of that at the previous day's high or close, or you could kind of do a balance of the two. And so I've had people say to me, well, how do I know? Should I be buying at the high of the day, the previous day, or the close? And there's no definite answer to this other than what are the futures looking like in the morning. So if we're in a rising bullish market, we're seeing futures continuing to point up, I would definitely get in with half my shares at the high of the previous day. If we're seeing that futures are kind of flat, I would get in at the close. Right? Now again, what's important here is you take this, you don't just say, well, we're rising bullish, I'm going to apply this strategy. Okay, it's not as easy as that. What you need to do is remember what we just described in the overall market sentiment approach, meaning that, okay, if we're rising bullish, are we overbought though? Okay, so are we in a situation, let's say, where we're hitting our 52-week resistance level, right? Because chances are we don't want to be buying all in at that point. Will probably be a caution. So if you looked at, for example, how we were positioning the buying sentiment in the outlook in Ideal Trading Lifestyle, you would probably see that even though we were rising bullish, we were still identifying ourselves as a caution. If that happens, then wherever you see a caution, I would highly recommend that you just revert back to the bearish buying processes. Okay, so rather than, in this case, rising bullish, buying at the previous day high or close, and buying the balance at trend support, if it was a rising bullish with a caution, then what I would do is I would say, okay, I'm going to treat it as a rising bearish. I'm going to buy 50%, in this case, at the previous day close, not the high, with the balance at trend support. Okay, so it gives you a better understanding as you go forward. Okay, so I hope that this working example that I just shared with you, and you can use these charts now and apply them as you go forward, because they're going to help you with multiples. Now, we're going to be doing a lot more things going forward with our elites as well. Our next session that we're going to be doing is some goal setting with you. What we want to do is help you come up with what is your 2013 trading plan going to look like, right? How involved do you want to be? Do you want to be, for example, just doing 1 trade a week, or do you want to be doing 2 to 3 trades a week, right? Are you looking, what's the size of your portfolio? So we want to help you understand how you're going to set your goals for 2013 so that when you look back over the year, right, first of all, you've got metrics through the year that you can apply to this so that you can say, yeah, am I on track or am I off track? And at the end of the year that you can look back and say, yeah, this was great. I achieved my goals, exceeded my goals, or I didn't make my goals, and here's why, right? So be able to understand that. So those are some of the things we want to be doing. We also want to be getting more involved in things like how do I do trailing stops. So we're going to be covering those in subsequent sessions as well. So we're excited about offering these elite sessions to you. And the reason why we've kind of broken away and we've offered them really to our preferred client group, because honestly, you're the people that are attending tonight. You're the people that are coming forward. A lot of the clients are only interested, from the Ideal Trading Lifestyle standpoint, only interested in taking the pick, buying the pick, selling the pick. Don't want any other information, and that's fine. That's great. So why would we inundate them with all that other stuff? You people have come to the table and have told us we want to build our knowledge. We want to get more than our 1 or 1.2%. We want to apply the trading strategies and get our 2 to 3%, or perhaps options with our which is our 10 to 20%. Okay. All right. So that concludes the information that we had today. And believe it or not, we've been going for an hour and 15 minutes. So we've covered what may not seem like a lot of information is really a lot of information. So we've covered a lot of ground here in an hour and 15 minutes. And so what I'd like to do is just see if there's any questions. And I'm not seeing any questions. All right. Okay. Again, I just want to just leave the mic open for a moment. If you've got any questions, you can either type them in. Okay. I've got one question here. There we go. Where can I get a copy of the overview of the market sentiment chart and the neutral buy period chart? Well, you'll have this through the video link as well, and I think what I'll do is I'll chat with Marlene, but I'm sure that what we could do is turn around and send you each these charts. Now, we had provided them through our boot camps as well. But we're more than happy to provide them as an attachment for you, so you've got them. So those would be the market sentiment charts and the neutral buy period charts. I would also suggest including the last two charts, which essentially is the position sizing based on multiple entry points. Ari, just thank you. Great refresher after Christmas. Thank you so much for that comment. Okay. Any other questions at all? Any items that you would like us to review, any stocks, just while we're here as well. But what I'd like to do is just take this opportunity is sign out on our recording. And so want to again thank everybody that's been in attendance here today. And for those listening via video link, please take the time and review this video. And if you need to review it again, there's a lot of information here. But this is Randy McMullen now on behalf of Ideal Trading Lifestyle and our Investor Ed education courses that we're offering through our elite clients, signing off for this edition of our elite trading event.